A very good evening to one and all present here, and welcome to today's event. We have our product manager Jason D'Souza, who would be providing a walkthrough on stock research feature. Towards the end, we will also be having a Q&A session. Over to you, Jason.
A very good evening to one all present here, and welcome to today's event. Over the past few webinars, I spoke about different strategies to pick winning stocks. In my latest event, I spoke about how you can manage your portfolio on Markets Mojo. In today's event, it will be slightly different. I'll be taking you across the stock research feature. It's the main core feature of Markets Mojo. Today, we'll analyze different stocks. We'll look at how Markets Mojo rates stocks. And towards the end, we can take a lot of questions. You all can ask about any particular stock, and I will show you my way of how I analyze stocks using the stock research feature. Before I start off, a disclaimer that investment in securities is subject to market risk. Past performance should not be construed as a guarantee for future returns. So there's this particular quote which before the event I was looking at, and it's really nice. I'll just read it. This is by ace investor Peter Lynch. What he says is that, I always thought if you look at 10 companies, you would find one that's interesting. If you look at 20, you would find 2. If you look at 100, you'll find 10. The person that turns over the most rock wins the game. Markets Mojo will help you turn all rocks. By rocks, I mean stocks over here and win the game. The reason I'm saying that is that unlike other research houses that are limited to only looking at BSE 500 companies or 150 top companies, Markets Mojo's analysis runs across all 4,000 stocks listed on BSE and NSE. We have an answer for each stock. We'll be turning over rocks for all stocks. So there's no limitation over here. When we use stock research feature, you think about a stock, enter the name, and you would get our analysis on that particular stock. Okay, so what will we cover today? I'll be taking you across 5 broad things. There have been a lot of demos on the stock research feature, but today's webinar, I'll be trying to cover, particular cards or particular features on the stock page that has not been discovered before. It's a really vast page, so I'll be talking about 5 broad parameters. And if I missed out on anything, you all can also ask me on the Q&A session. Starting, how to decide if a stock is for you. This is really important. This answer is there on the Mojo dashboard. I'll also be taking you across it. It's really important to understand whether the stock is actually for you. There might be a small cap, micro cap, large cap or mid cap from any particular industry. But what's important is that, is the stock actually for me? When I say it's for me, does it fit in my investment strategy? Does it fit into my portfolio? The second thing we'll cover is how has Markets Mojo rated stocks. This is the Mojo score. This is something which is the most important thing of today's session. We'll be understanding the Mojo score, how it runs. Towards the end, when I show you my strategy, I'll also show how I use the Mojo score in actually analyzing stocks. The third one is that, is the market interested in the stock today? This is slightly interesting. We'll be looking at the price and return performance tabs on the stock research page. We'll try to find out, is the market actually interested in the stock? Apart from you being interested, apart from we running a Mojo score, is the market actually rewarding the stock today? Is there buying interest in a particular stock? The fourth one is, what's the actual performance of the company's financials? We'll be looking at the 4 to 5 financial results that come in from companies. How are the financial results? What do each mean? And is there any particular trend we can identify? The fifth and the last thing we'll be looking at is that, are shareholders adding more or exiting? There's a shareholding pattern card in our Markets Mojo stock research page. We'd be looking at how different types of shareholders are either adding more or actually exiting from that particular company. So broadly, we'll be talking about these 5 questions today. Let's start off with the first one. How to decide if the stock is for you. As I said, you might be a conservative investor, you might be a very aggressive investor. But let's try to separate out risk when we pick out a particular stock. There's this particular risk meter I've made. You all can take a screenshot after I'm done explaining what this risk meter is. But this particular risk meter will help you differentiate between stocks that can be risky versus stocks that won't be that risky. The first one is quite basic. When we look at small and micro cap stocks, there is a high potential or there could be a really high risk factor attached with that. Whereas large and mid caps are slightly over the low risk. Now this can depend, across different stocks. It's not that this is a hard and fast rule, but this is just a differentiation. The second one is on the quality dot. So we have good and excellent quality stocks towards the left, which is low risk. Below average and average quality stocks could be higher risk. The reason I'm saying that is quality looks at consistency of performance. How consistent have the financials been of the company? Now, companies that are not that consistent could fall under below average and average quality. So there is chance that that particular stock might face a lot of volatility in the market. So they fall under a high risk meter. The last one is on valuation, where every valuation parameter, fair, attractive, expensive, very expensive, any of it, that falls under a slightly low risk. But when we have risky valuation companies, many of you all must have not seen this, but we also classify very risky and risky valuation companies. In the bracket, I've written negative book value. Thus, the total liabilities are slightly greater than the total assets of the company. Now, let's not get into the technical. What I mean here is that if you find any company which is risky and very risky, you should understand that this is rating high on the risk meter. The second one is, how much should you buy of a particular stock? How much you can actually allocate? And if you notice, every webinar I've come forward, I use this hard and fast rule. But how much you can actually buy of a company, let's make it simple. Let's go faster today. Let's follow the 10-30 rule. What I mean by 10-30 rule, not more than 10% in a single stock, not more than 30% in any sector. I've already covered this in my past events. Let's follow the 10-30 rule. Now this 10 can become 12, can become 8, can go at least till 15. This 30 can become 35 or 40. Totally depends on your risk appetite. But when you're researching a stock and you want to add that stock in a portfolio, remember this benchmark of 10-30. This will really help you in not actually having a very concentrated portfolio. It will help you have a diversified approach. So how to decide if the stock is for you? What I'll do is I'll quickly take you all to the stocks page. We'll go through each question and then we'll move to the stocks page on where you can find these particular parameters. Okay, so if you all know this, research any stock option just below research. And you can add any particular stock over here. Here I'll just add TCS for now. Okay, so if you look at TCS, to find out if it's a large, mid, small, micro cap, there's a market cap indicator just on top. Okay. Now, good and excellent quality, fair, attractive, expensive, very expensive. It's really simple. If you just scroll below, there are many ways to find it. There's this Mojo parameters tab over here, which will tell you what quality or what valuation is the company running into. You're saying quality, excellent, valuation, expensive. It's not that risky, so it's fine. Now moving to how much you should buy, this is also very simple. It's found over here. How much is TCS for you? That's the first thing. And how much you should hold for this particular stock. You can see this 10-30 rule being applied over here. Yeah. So if the sector exposure is more than 30% in IT software, since we're looking at TCS right now, then you should think twice before buying or adding more of this particular stock in your portfolio. So this is where you can actually find out if this stock is for you on the stocks page. So I'll move on to this next question, which is the Mojo score. What's our rating on a particular stock? How does Markets Mojo rate stocks? There is this particular meter you can see here, which is running from 0 to 100. Right now it's at 81, which is strong buy. And this particular score is calculated by the 4 different parameters which are listed here below. I won't spend much time over here. Most of you will actually know about this. But just to brief, quality and valuation look at the long term of the company, the long-term consistency parameters. Quality looks like how much has the company grown over the long term in terms of its financials. Valuation considers the current price of the company, the past price, and also looks at its peers. Financial trend, if you all remember, I've done a lengthy webinar on how to decrypt the CFT score. It's also available on the Knowledge Center. Here we look at the result performance of the company to its past and peers. And lastly, technicals, which views the stock's price trend. Understand that these two are the near-term momentum parameters, whereas these two are the long-term consistency parameters. Now, based on these 4 dots, we calculate the final score of the company. Now, if you notice that on the stocks page, we've recently released a new feature, which is known as the previous score. This gives us an idea on how the company has actually moved on the score chart. If you see, this particular thing says that the company changed from buy to strong buy on 7th November and at what price. So it's actually giving us an indicator that it has changed from buy and has become better to strong buy. This is available on the stocks page. I've received a lot of questions recently. People could not find it. If you simply go on the stocks page just here below, you can see the score changed from buy to hold on 5th December at so-and-so price. So this is available on the stocks page. This is a relatively new statement we've kept over here. And this is because you all have come back and given us this particular request that help us understand how the stock score has changed over a period of time. This is the power of the Mojo score. It helps you understand what's the rating as per Marcus Mojo. We will also look at this and use this in my personal strategy later. So I hope all of you have understood the Mojo score over here. Now let's move on to the next question. This is slightly new. Is the market interested in this stock today? You might find a particular stock, your friend might give you an opinion on a stock. Markets Mojo might rate the stock in a particular way. Either buy, strong buy, sell, and so on and so forth. But is the market actually interested in the stock today? So we look at price action, volume, and we'll also look at return performance in the next slide. This is the particular graph I've attached over here, which is the price movement of the stock. We'll also look at delivery volumes, what it actually means, and bulk and block deals. This gives us some idea of how much of the market is interested or how our institution is interested in this particular stock. I'll jump to the stock page right now. You can see these particular tabs over here. We'll go to price. Okay, and this first card which I attached on the PPT, what exactly does it mean? It's very simple. You can look at the price, the return performance of the company across different time frames. It's very simple over here. Here we've also attached the stocks return, the sector's return, and Sensex return. If you'll remember, I think this is the price of Friday. IT sector had a major downturn. But if you see, TCS is 1% above than the sector. So if you see, the sector on the whole has not done well in the one-day movement, but TCS has done better. Now you can actually click on different horizons over here and see how the company has performed, the sector has performed, and Sensex has performed. So for example, let's look at 1 year performance. TCS is down by 8%, lower than Sensex over here. So TCS actually underperformed Sensex. But if you see the sector as a whole, it's done even worse at minus 15%. Now, if you look at delivery volumes, so something I've attached over here, if you can simply go on the right, this is delivery volumes over here. By delivery, apart from the overall trading volume which happens on the particular stock, delivery volume gives you an idea whether that share was particularly invested by the investor. Has he actually exchanged that share in his demat account? It gives you an idea of what is the interest of long-term buyers in the company. You can simply click on this I dot over here as well to understand what each card means. If you can see hundreds of cards on Marcus Mojo, but if you click on this I dot, you'll get an idea what actually it means. If you click on full details, you'll actually understand that around 55 to 57% of the volume is actually delivery. So you can see 18.67 lakhs traded, from which 10.45 have actually shifted from demat accounts. It gives you an idea what's the interest of long-term buyers in the company. Towards the right, we have bulk deals and block deals. Now, maybe we have not actually covered this before, but this is also really important. If you all know that bulk deals means any particular company which has any particular trade which has greater than 0.5% share of the overall company. So you can see bulk deals last 1 month, nothing has actually happened. If you click on full details, there's no particular information here. But on block deals, we can see a particular information over here. Okay, so in block deals also, if you can find out how much a particular investor has bought more than 5 lakhs or a value above 5 crores in a particular share. You can see around 15th November, MSCI index has bought around 78,000 at what price? On which particular index? This is BSE, here's NSE. So if you see a lot of buys over here, you can actually find out is there buying interest in this company? Are actually institutions buying into the company? Okay, so if you click on full details over here, you can actually see at what exchange, which particular institution bought, what's the type of deal. And you also get an idea of the support prices over here. So this is particularly bought at 3335. And you can see the company's current price is 3292, so slightly low. So bulk and block deals also give you some idea about what's the buying interest, especially by institutions, especially by big investors. Now moving on to this next particular return performance. So in return performance, what I've done is that I'm going to look at 4 different statements over here on the left. And these are the 4 different cards which will change as per the statements. So now if you see this particular card over here, which is also on the stocks page, this particular return you see over here is the stocks return, and this particular gray box over here is the return of the index. Across various different periods, you can see how the stock has done in comparison with the index. So if you see here 1 year, the stock is down by 11% and Sensex is up by 5.74%. And you can see this across different time frames. Now, the next particular thing I want to show you all, which many of us have not actually gone through it, is the total returns of a company. Now, most of the times investors come back and tell us that this particular company is giving high dividends. Is it worth actually investing? This particular card will actually help you understand how much of the return is coming from capital appreciation and how much of the return is coming from dividend. If you see here in the 6 months time frame, the stock has given 3.58%. The dividend return has been 1.09%. So you can see 1/3 of the return in the last 6 months has come from dividend. Even 1 year, you can actually break it down, 2 years, 3 years, and so forth. You can also look at this into high dividend companies. For example, Coal India. Let's go to Coal India. Coal India is known for giving high dividends. A lot of feedback come in. Should we invest in this stock particularly for dividends? If you go to returns and slide right, this is the card I was talking about, dividend yield. If you see here in past 1 year, from the dividend Coal India has given, 15% is attributed to that. 49% is from capital appreciation. So total return of 65%. You just add these two. This is really important. If you want to look at any dividend specific companies, come to this particular card. Understand how much of dividend is actually coming when you look at the total return. If you see for this company slightly higher, I think 33% over year and 2 years frame is from dividend return from 99, and you're around 69% is from price return. So this is really important to understand if you want to analyze any dividend paying company. Okay, so now let's move on to the next particular question over here. Is the company's return consistent? This is the quartile performance of the company. Here, what we've done at Markets Mojo is that we've looked at all companies in a particular sector or in a particular industry, and we've grouped them as per a quartile. Quartile, as the name suggests, means quarter, so 25%. What we do is we look at all companies in that particular industry or particular sector, and we group them into 4 different groups, into 4 different quarters. And companies which have done the best come in the first quartile. Companies which have done slightly lower than the first one have come in the second, third, and fourth quartile. So if you see here, this particular company, quarter to date returns, it's in the first quartile. June to September, it's in the third quartile. We need to find companies which are consistently coming green here. If you actually look at investing in a particular mutual fund, many fund managers actually tell you all, or many investment advisors actually tell you all, to look at not only the mutual fund that has given the top return this year. Look at mutual funds that are coming in the top 3 over different year horizons. We are trying to look at consistency here. If you stumble upon any stock and you see this particular thing as 1, 2, 1, 2, you know that this particular company is coming in the top 2 quartiles over longer periods. So this is a really nice way Markets Mojo summed it up, of giving you an idea of how this particular company has performed. So you can see this particular card is for Infosys. It says that it's an inconsistent performer because sometimes it's on the first quartile, sometimes third quartile, second quartile, so on and so forth. Okay, so how do you get this on the stocks page? You just go on the right. And what we've done is return quartile by closest peers group, by the industry group, by the market cap group. Okay, and across all, this particular company, Coal India, has been an inconsistent performer. It's not performed consistently over different horizons. When you look at particular companies like this, you should look whether it comes in the first or second quartile over a longer horizon. The last one is risk-adjusted return versus Sensex. This is a really nice slide which actually helps you understand that how is the company's return actually justified considering the risk of the company. When I say risk, I'm talking about volatility. How much the company moves, how frequently it goes up and down. Basis that risk you're actually taking, are you actually getting enough returns? I'll take you on the stocks page over here, and we'll go on TCS, the actual example on the PPT. Go to returns and the last slide. Okay, so risk adjusted return versus Sensex. Now look at this graph. I'll just zoom in. If you see a high returns, low returns, high risk, low risk. Our goal is to catch companies in this particular quadrant. What I mean by that is companies which have high returns and low risk. So you see this particular quadrant, you should actually catch companies over here. Okay, and how is this actually calculated? Simple math formula. This absolute and this is risk adjusted over here, and volatility. You just divide the absolute with the volatility over here. The returns by the risk. So risk adjusted returns here, it says minus 0.38 and 0.33 for Sensex. So if you see this particular graph, Tech Mahindra is a company which has high risk and low returns. This is as per past performance. You can see Wipro over here. Even Wipro has high risk and low returns. So if you're looking at companies from the IT sector, you know that these particular 2 companies have not performed well because even with high risk, they are giving low returns. Our goal is to go this side, upwards. Look at TCS over here. It's given, the return is actually better. It's actually, I think, the best company in the IT sector right now when we look at risk versus returns. But overall, it's still low risk, low return over here. Our goal is to catch companies from this particular quadrant. So anytime you come on a particular stock and you want to know if the market has rewarded the stock, stumble upon this particular card and look at companies from this quadrant over here. Okay. Now moving on to the next particular question, the fourth one over here, is the financial statements. How has the company performed? I had actually covered this in my CFT webinar over here. I'll just quickly take you all across this. There are 4 different financial statements we'll be looking at. The first 2 are quarterly results and profit and loss accounts. Below that, I've actually put the period in which it actually comes in our system. So quarterly results, as the name suggests, comes in quarterly. P&L accounts, we look at half-yearly periods. In that, we ask a couple of questions. I'll just take you to these 3. Is the company's top line, which is the revenue, and bottom line growing? Is the company actually able to expand its top line and bottom line? We look at what is the operating profit trend of the company. Also, we look at how is the company handling its interest costs. Moving to the next one, we look at the balance sheet. And as the name, just below the name, we've written annual because this comes annually in a system. Here we look at, has the company's borrowings increased or decreased? This is another important thing we look at. And the growth in the company's assets, the current asset and the fixed assets, are they actually growing? Coming to the fourth one, which is the cash flow statement. Now here we look whether the cash flow from operations is actually supporting the company's profits. If people who are actually aware about accounts know that there's cash flow from operations, investing and financing activities. Here we're actually looking at cash flow from operation and does it support the company's profits? And is it generated by internal operations through selling and buying? Okay. So I'll take you to the particular, I'll take you to financials of how it looks over here. So we have quarterly results, as I said. Now here if you see, this is quarter on quarter. Okay, we also compare sometimes year on year. It depends if the company is seasonal or non-seasonal. Now if you see it's IT company, we look at just the previous quarter, September, June 2022. So we look at just the previous quarter. Otherwise, sometimes we look at year on year for seasonal companies. So if you just scroll on right, you can see how each parameter, whether it's growing or not. So you can see net sales, 46,000 crores, which has gone up to 55,000 crores, so on and so forth. You can just scroll on the right and you get an idea of each element. And we look at all these elements when it comes to the CFT final score. Okay, half-yearly results, 9 monthly results. Now you might ask, okay, why are you looking at half-yearly and 9 monthly? Because we are not trying to look at one particular horizon. We are trying to look at across horizons. You just scroll below annual results, P&L statement, balance sheet. Okay, here as I said, we are trying to look at whether the fixed assets of the company are growing, the investments are growing, so on and so forth. P&L statement, and lastly cash flow. This is annually. Here we look at the cash flow from operating activities, is it growing? So you can see there's a consistent growth within the cash flow from operations. Now apart from all these numbers and these statements, if you want to actually know how the company has performed in that particular quarter financially, you can go to the financial trend tab over here. This is really interesting. I have done a detailed webinar on this where I actually show you the price movement of the company, this line over here, with the CFT score. Now, after looking at all financials, we finally calculate this financial trend dot. Here for TCS, it's showing as 6. Okay. So if you can see here, we have 9 factors that are working for the company. They've got a plus 9 point and minus 3 point for what's not working for the company. Okay, so you can see operating cash flow yearly is high, so on and so forth. So all the financial I spoke about, it runs into our system. And then finally, we get the CFT score over here. Okay, so I'll move on to the next particular question, which is shareholding. This is the 5th question I spoke about. And this is really important. Very few of us actually go towards the end of the stock page and actually look at the shareholding of the company. On the right side, I have a particular table which compares the shareholding quarter on quarter and mentions if there is any particular change. The first question you can ask is, has there been any growth in certain type of shareholders? If you see from June to September quarter, there is some FI interest over here. There's some interest from insurance companies. There's been a growth. Even mutual fund companies have shown some slight interest over here. Okay, so the first card over here actually tells you the different participants, how have they been increasing their shareholding quarter on quarter. The second point over here, I want you all to just pay attention to this one. Are mutual fund companies invested in the stock? Now you might be asking me that, okay, Marcus Mojo analyzes, so why should we look at mutual fund companies investing? Now this is really important over here. There are very small companies being traded, and small cap companies which are being traded, if there is any particular mutual fund interest, then you all should actually understand that mutual funds have actually identified those companies and there might be some minimum eligible criteria where they've actually invested in this particular stock. So when big institutions like mutual funds or FIs are actually investing in that company, it gives you some idea that okay, there is a research team of mutual funds also which have gone through thoroughly and actually investing in this company. Now large and mid caps mutual funds always invest in. There are many mutual funds that have invested across all large and mid caps. But if you find mutual fund interest growing in a small or micro cap company, then there is some particular reason they've actually invested in that. They've done some research back and forth to actually invest in that company. This particular question you should ask if it's a small or a micro cap. It's really important. Similarly to exposure of the stock to FIs, if you all know over the past few webinars, we have come forward and actually given a bullish opinion on foreign institutional investment. We think that India might be the right place for foreign institutional investors to actually enter in. Or we can also look at this particular thing. Are the FI holdings of the company increasing? Are FIs buying more particular shares? With the big shift coming from west to east and India leading from the front, exposure of the stock to FIs is something you all should actually look at. Especially if a small cap or a micro cap someone has actually entered in, it is a positive signal. Okay. If you go on the stocks page, shareholding is really simple. This is the tab over here. Okay, so this is the shareholding snapshot. You can see how much mutual fund promoter holds 72% in TCS. You can click on full details and go more in depth. Okay, and this is the particular card over here to compare across different shareholders. And if you go on the right, you can actually see, okay, FI holdings are decreasing, mutual fund holdings are decreasing over here. Insurance companies have increased, so on and so forth. This is the shareholding tab over here, which gives you some idea on how are different participants actually buying in the market. Now, apart from the 5 questions I have answered today, you might be wondering that, okay, now this is how we can actually analyze stocks on Markets Mojo. But, how do I actually analyze stocks? So I've made this small particular strategy, okay? It's my approach where I look at the timeline of a stock. It's my approach. If you come on any particular event and you ask me, okay, Jason, give your opinion on this stock. This is how I analyze a particular stock on Markets Mojo. The 3P approach, first thing is I look at the past performance of the company. I look at how the company has actually performed. Let's pick any particular company. We have to look at how it has performed before our analysis. Before we look at the stock today, has the stock actually given returns to investors? How has been the dividend, so on and so forth. And I also look at the financial results because the financial results speaks for the company's performance. If the company in the past has done well, it has given goodwill to shareholders. If the company's revenue has increased, profit has increased, it will reflect in the financial results. The management can come in front of you and give you any particular hope that we will see a growth in profit, so on and so forth. But let's look at numbers. Let's look at in the past, has the company done well in terms of return performance? And has the company done well in terms of its financials? So this is the first P. We look at the past performance of the company. Very important, the first one is present. I took you all to price movement. I showed you all bulk block deals and even delivery trades. You all should also look at how the company is doing currently in the market. Is it actually correcting a lot? Is it on an upper circuit? So on and so forth. From past, we would also look at the present, today's date, how has the company been performing? Over the last 1 week, how has the company been performing? And the last one is the potential of the stock. Okay, past, present, third P is potential of the stock. We're trying to look over here at the current and the previous Mojo score trend. If you all remember, I showed you all one particular statement of the current and how the score has improved from the previous one. And I also look at some of the technical indicators. Is the company actually turning bullish or is the company turning bearish? So I'll just take you to one particular stock and show you how I use this 3P approach, okay? Okay, so let's pick up any random stock. So I'll go to the markets page for that. I can see Friday's performance over here. Okay, so let's pick up any stock to understand this one thing. I'll look at Titan over here. Okay, so let's go back to my P approach. The first one is past. Let's look at the returns. You can simply click on returns. And this first card over here will actually tell you what has been the past performance. If you see here, 1 year it's given 10%, whereas Sensex has given 5%, outperformed. Okay, 6 months also it is outperformed. Even this first card over here tells you, in 1 year it is outperformed Sensex and also outperformed the sector. So the first P and under returns, I can see that it's giving me a positive outlook. The company previously has done well. You can see 5-year returns 220%, 4-year returns 185. Across most of the periods, except this 1 month period, it's actually been outperforming the Sensex. You can see the returns over here is greater than the gray one, which means Sensex over here. I'll look at the financial results. Now I can actually go click on financials, and look at all of them together over here. But too many numbers can actually confuse you. Let's look at financial trend, which actually gives a concise opinion on the financial of the company. Okay, now look at this particular chart. Starting from December 17, the CFT score was positive. It slightly turned negative. The company saw some downward trend, but now it's moving upwards as the CFT score has been increasing. Okay, so only one thing is that from 19 over the last quarter, it's fallen to 12. But if you give an overall opinion on the financial of the company, it has seen positive financial trend scores over the past 1, 2, 3, 4, 5 quarters. It's actually seen some positive performance. So the past over here for this particular company is good. The return performance has been good and the financial results are not that bad. So this is something which has been ticked off. Second is the present price movement of the company. Let's look at the present over here. Click on price. Okay. So if you see yesterday, the company was up by 1.2%. Sector was also up by 1%, whereas Sensex was down. So it has actually outperformed Sensex yesterday. You can look at the price summary. The stock has gained after 2 days of consecutive fall. Okay, you can see rising investor participation. If you remember, I spoke about delivery volume. This is slightly increased by 9.68% against the 5-day average. So it's giving me some positive momentum currently of the current performance of the company. You can simply go here and actually see the delivery volumes. 1 month delivery volume is fallen by 8.5%, but 1 day has increased. Okay, so if you look at the present of the company, there has been some momentum in the company. So the second P is fine as well. Lastly, the potential of the company. Okay, let's see how Markets Mojo's score has changed. To go to the score, simply click on dashboard. I think most of you all know it's the first thing which is available over here. Now, okay, look at this. The score has changed from strong buy, which was over here, to buy. Okay, so the score has actually fallen, which is something negative. If this was changed from hold to buy, then it would be something positive. But unfortunately, it's changed from strong buy to buy. Okay, but it's still in the buy criteria. So I can actually, it's still in the buy criteria over here. But the trend is downwards. Now this is one negative indicator over here. So I'll just cross this out. And then let's look at the technicals. Okay, I can see mildly bearish, but there is mildly bullish also. And even here it's a downtrend. You can see the company turned mildly bullish from bullish. The company was bullish before and it has turned mildly bullish. So when this is a cross sign. So I can't reach to a proper opinion over here. If I was looking at Titan to invest in it, even though it has done well in the past, nowadays the price movement is good, but the potential of the stock doesn't look good over here. So if you ask me, should I invest in Titan? I'll just give you a simple answer. I would say no. There has been a downtrend over here in potential. So it can be that in the future, the company might not actually perform well. But this is my way. If I have to analyze the stock, I'll look at how it has done in the past, what has been the price movement today, and what's the future potential of the company. If you get a particular stock in your mind, you can look at these 3 different time horizons before entering in that particular stock. Okay, so now we've also looked at my particular approach. Now, this particular feature I was talking about, stock research, there are many paid options in that. The score is also paid as well. So if you're not a Markets Mojo subscriber, you should actually look at, looking at this as an investment. Buy the 1-year plan, you get 1 month free on that, and you can buy the 2-year plan and get 3 months free. I'll ask my moderator Prashant to actually flash the link on just below the video so I can take this particular plan. And with that, I'll open the Q&A session. Over to you, Prashant.
Thank you, Jason. We have a first question from Tushar.
Okay.
What's your opinion on UPL? Can it become a multi-bagger?
Opinion on UPL. Okay. I'll just quickly search the company if you could share my screen. If you're on any particular stock page, you can just simply search UPL over here on the top. Okay, so what's my opinion on UPL? Okay. Now I can go to this particular approach over here I've shown you all, which is past, present, and potential. But I'll quickly run through this. Okay. Now if you see, the score has changed from sell to hold. Okay, the company was in the sell criteria previously, which has changed to hold, which is a good positive for the company. Is this? Yeah. So you can see here how much you should hold and is UPL for you. If you see, the company is medium risk, medium return. I'm more of an aggressive investor, so with medium risk, it's fine. And the return is also slightly justified as giving medium return. If this was low return, then you might know that the company, even though it's giving higher risk, is giving a low return. Okay, you can slightly go below over here. I think my screen is not showing currently. Yeah. You can slightly go below over here and go to the technical trend of the company. Now, if you see, the company has turned mildly bullish from sideways, which is another positive. Okay, the company has moved slightly upwards, which is another positive over here. So two positives to start off with. Okay, even the valuation shows attractive. This gives you an idea of a good entry point. If you're looking at investing the stock and if it was slightly in the expensive, very expensive range, it has limited capital appreciation, but here the valuation is attractive as well. Scrolling below, the financial trend is flat over here. Okay, so that means the company's recent quarter hasn't been that good. So if you ask me overall, the company is actually looking like a potential turnaround. This company might turn around because it's also churned from sell to hold. What you should look at is the upcoming quarterly results. If the upcoming quarterly results is good, the company might move upwards. Okay, so I can't, say if it can be a potential multi-bagger. If you see the financial trend score here has been 1, 3, 8, 10 and the stock hasn't moved that much. It's trading from the range of 640 to 800. But I am sure that as soon as the company sees a good financial trend, this price should move upwards. If you want to ask me if you should invest in the stock today, I would still say wait for the financials. Or if the score turns buy, that would be a good time to invest in UPL. Yeah.
Okay, Jason. Next question is from our investor Alan Matthews.
Okay.
Stock GHCL has been underperforming for quite some time now, down 10% plus as of now, as of this week. Your views, please.
Okay, so let's go to GHCL. I know I've seen this particular question coming by investors before. I think many of you also hold it in your portfolios. Yeah, so the score has changed from buy to hold, which is one negative point over here. The company was previously a buy and it's changed to hold. You can look at the technicals as well. I think the technical should be, the technical has also turned mildly bearish from sideways. So there's two negatives over here. What else we can look at this particular company? We can look at the price and returns. Okay, so the returns actually gives you a divided opinion. If you see year to date, 1 year, 2 year, 3 year, 4 year, it's been outperforming across all. But 6 months, the last 6 months, the company has shown some negative performance over here. So I think 6 months, 3 months, 1 month, it's shown some negative performance. So the company is facing some headwinds, and that's the reason it could be mildly bearish right now. Now, if you ask me if it's a good time to invest in this company, straightforward, I would say no. If you're holding this company in your model portfolio and infinity portfolio, we will get back to you and let you know if you should exit. So, but yes, if you have to enter this company today, the answer would be no. And yeah, so let's also look at, we can also look at the financial trend of the company. Okay, you can see the financial trend over here. This is the score and the company has moved very well. So it's not like the company has always been falling. It was actually at a very low level of 200 and it's gone up to 600 over here today. Okay, but only the financial trend this time, which was 39, is lower than last time's. Okay, so if you're asking me to enter the stock, the answer would be no. You should give the stock some more time. And if you're asking me to exit it, just mention if it's in your model portfolio, infinity portfolios, we will get back to you. Yeah.
Another question from an investor.
Yeah.
Sridhar. Good evening, Jason. Mojo latest indicator from buy to hold, etc. does not really indicate the trend over last 1 month or so. Can we have a chart or a graph for Mojo score of any given stock, like price movement?
Yes, I will speak to my team and see if this is possible. So you're right. We've got the previous score over here. We don't have over a longer period. I'll speak to my team and see if this particular thing is actually possible. You could just show my screen over here. I think the chart you're referring to is a longer term chart like this, I think, with financial trend and price. I'll speak to my team and see if this is possible, but the recent one we have actually added is just the last score over here, which is this particular statement. Yeah.
Another question from an investor, Raju. Vedanta for long-term investment?
Vedanta. For long-term investment, I'm not really sure, but I'll still take you across it. Could you share my screen? Yes. So now we are on Vedanta over here. It's down 1.5% on Friday. Okay, so if you see the score has changed from sell to hold over here. So that is a plus point. And currently it's at 60. So I wouldn't say just to enter right now, just give it some more time. Okay, we can scroll below over here. Even the technicals has turned mildly bullish from sideways, which is another positive indicator. So if you remember, I always look at the current and previous score and technical indicators, which is a good thing over here, which is yes for Vedanta. It's showing some upward movement. Now let's look at the returns of the company. Okay, there's a split performance over here. It hasn't seen major up movement even in 1 year. It's actually down by 11% over here. Okay, so over the longer term as well, it's not given that much returns. If you see, it's actually outperformed Sensex by 10 years. Okay, in the 10-year horizon, the Sensex has given 220, but the stock has only moved up by 64%. In the past, it's not done well in the long term. I'm not sure from here. Let's look at financial trend. Okay, now this gives a good idea over here. You can see that as the financial trend score fell from 36 to 30 to 26 to 22, we've also exited the particular company, so we don't hold it currently. But I think my screen's not visible. Yeah. But as the company's financial trend score has fallen down, currently it's at 7 over here and it's fallen to minus 16. So, it shows some particular negative trend when it comes to the financials of the company. Long-term performance, I can't actually, comment on that because the company it's I think a commodity-based company, so it might face anything in the market going forward. But if you're asking me to invest now, shortly for today, I would say still no. Give it some more time, even though it's showing some potential turnaround, give it some more time. If it enters the buy strong buy category, that's when you can look at investing in Vedanta.
Okay. Next question by our investor Kaku.
Yeah.
Can you please check the same for Maruti?
Maruti, okay. So Maruti, an auto company. I'll just share my screen. Okay. So yes, the score has changed from strong buy to buy, which is a negative over here on 7th November, which has happened recently. But it's still in the buy range criteria. So, many companies I've seen that have been multi-baggers, move from buy to strong buy to buy to strong buy. Sometimes it does go to hold, but it remains in this particular category over here. So this is not a major problem over here. It's still at 77, which is a good number over here. Okay, you can look at the technicals. The company is mildly bullish from bullish. I think with this, it's also impacted the score because of this, so it's fine. Moving on to the financial trend over here. Well, this has given a good story over here. The company was facing, major downturns over here as the company has seen negative performance. But you can see as the green bars start coming up, especially the last quarter, it's actually moved upwards. Okay, so this is another plus point for the company. If you're holding the stock, continue to hold. So if you're looking at investing as well, it's a good time to invest because the score is at 77. Yeah.
Next question by our investor Uday.
Yeah.
How is Markets Mojo stock research different from other platforms?
So Markets Mojo stock research, I'll just take you to this particular code which I showed in the starting. Now, one thing is from this particular code which you can understand is that we look at all companies. So we don't look at one particular company. We're looking at all companies right now. Markets Mojo stock research also goes more in depth. We're not just limiting ourselves to the financials of the company. We also have technicals. We're looking at different horizons, different time frames. So what actually separates us from the rest of the industry is that look at the amount of information which is actually given to you on the stocks page. We're trying to go in depth over here, and we're not limiting to only, let's only look at large cap companies or mid cap companies. We're looking across all companies. So you have an answer for each and every stock which comes up to your mind. So that's one thing which actually separates us from different platforms over here. Okay.
Yeah. Next question is from Karthik Mohan.
Yeah.
Hi sir, help your suggestion for investing in Lithika Infrastructure.
Okay, I've not seen this company, but I've heard of the first one. I think you asked this one to Mr. Sunil also recently. Okay, so I'll just show my particular screen. Okay, so we are in Likhita Infrastructure over here. It's a micro cap company. Just be aware, sir. Remember, I told you about micro cap and small caps. They are a bit risky. So, you should actually consider this. Well, the score is good. The score is 80, strong buy, and it's also changed from buy to strong buy. Okay, that's one good positive plus point over here. But one major problem I can see, even before going down, is this first dot over which says yellow. The quality of the company is yellow over here, and there's some problem with the management risk over here. So it's an average quality company, again, much more risk. Micro cap, average quality company, only if you can take high risk, that's the time you can look at investing in this particular company, because it has two major risk issues over here. Valuation is very attractive, which is good. Scroll down below, financial trend. Okay, so the financial trend has been positive all throughout, 17, 13, 19, 15, 21. Okay, so this is a really positive signal over here. Okay, and you can see around 50 to 60, around below 100 crores is the net sales of the company quarterly, which is currently at the highest level of 82 crores. So it's highest at and grown in each 5 quarters. So you can see it's also highest this quarter and grown over the last 5 quarters. So there are positives with this company. Okay, so it's not been trading since a long time. There's no 3 or 4 year. It's a relatively newer company. It's micro cap, average quality. Our score still says 80 strong buy. If you can actually take that particular risk of investing in a micro cap and an average quality company, then I think you should go ahead. But if you're not up for the risk, then please stay away from this particular company. Which was the second one? I don't remember the name. Okay, Dynacon System. Let's just check that as well. Okay, another micro cap with a slightly lower market cap of 480 crores. Again, all 4 dots are green over here. Okay, so the score has changed from buy to strong buy plus positive point. Okay, so yes, even the technicals has changed from bullish to mildly bullish. Quality is good, so which is a very good plus point over here. And the valuation is attractive as well. It's a very good stock. I think the score should be really high because all the dots are green. 84, I think it's slightly better than Likita Infrastructure. Only one problem is that it's a very small company, sir. So there's a very high potential of getting good returns, but remember it's a very small company. But if I were to compare both, I would still invest in Dynacon's, versus the first one, because the first one had an average quality. Your all 4 dots are green, which is a good signal. Okay, so you can look at the return summary. Is the stock for you? High risk, high return, as I said. So if you're investing in this company, understand it's a micro cap, and if you can stomach that risk, then you can go ahead with this particular one compared to the previous one. Yeah.
Next question, Venugopal has a suggestion for you. Jason, all your stock research webinars are absolutely fantastic. Fantastic deep dive explanation. Thanks and keep up the good work. Please keep this in Knowledge Center for future references. Thanks.
Yes, I've actually kept them in Knowledge Center. I'll just take you all to the Knowledge Center tab over here. You can just share my screen. So there, if you go to Knowledge Center and you go to Best of Webinars, everything is available here, sir. So this is my last event over here and 2 strategies, decrypting. I've done 3 webinars. This is the 4th one. So we've kept, and we've also kept some of the other events over here. Okay, so all of this is actually available in the Knowledge Center, and what I'll do is I'll try to keep more of them in the Knowledge Center. So in case I was a bit fast today, or I was slightly technical, or it was, if you have any feedback as well, please drop it in the chat box on how I can improve it. But yes, all these particular webinars are actually there in the Knowledge Center. Yeah.
Okay. Next question we have by our investor Dilip. What is sideways? Please throw some light. How to judge whether a stock is bullish or bearish?
Okay. So if you could just share my screen. Okay. So, I can pick any sideways company by going to make your own screener. Right now we are an expert screener. Screener is very simple. We actually use different parameters to reach to a list of stocks. Here if you see the technical, I can go to technical grades and select sideways. Sideways is a company where it's neither bullish nor bearish. It's actually moving in a sideways, as the name suggests, in a constant momentum. So all these companies over here are sideways, So you can sort them by market cap. Look at Reliance Industries, it's actually a sideways company, TCS, Infosys, so on and so forth. You can click on any particular company and open it on a new tab. So what is sideways? You have to go to the technical dot over here and understand. Let's dive deeper. So let's go to view details. Now, how is this sideways calculated? We look at weekly and monthly across 7 different indicators: MACD, RSI, Bollinger Bands, moving averages, so on and so forth. Here we said that the company has turned sideways from mildly bearish. Okay, so it has turned sideways from mildly bearish. So previously it was red, which was mildly bearish, and has turned sideways. It can go to bullish or mildly bullish also if it follows this particular trend. Okay, so it's not anything negative if a company is sideways. There are many companies. So any company cannot move up continuously. It can actually face upward trends and downward trends. Sideways is when it's in the between of it. And across these 7 different indicators, we look at it and we have commented that this particular company, Tata Steel, is sideways. Yeah.
We have a next query by investor Wilson Joseph.
Yeah.
How to find all 4 parameters green?
Very simple, sir. Just share my screen again. All 4 parameters green, very simple, a very basic screener. You can apply it over here. Let's clear all for now. Quality, select green dots. Okay, then you can go to valuation, green dots. Financial trend. Okay, so here we're looking at the latest quarter, which is the 3rd dot over here. You can again select green. You see, as I'm selecting, the number of companies that are changing live. And technical, once again, you can look at the green dots, which is bullish and mildly bullish. Okay, so these are green companies, very good to invest in. You can see 44 stocks fall under this criteria where you can run the analysis, and these are your green dot companies, so HCL Tech, Coal India, so on and so forth. You can also sort them basis market cap. So here are some micro cap companies, and these are some large cap companies, so on and so forth. These are all 4 green dots, really simple to find it out. Research, then you go to your make your own screener. Under expert screener, you can add the particular filters. Yeah.
Next question by another investor, Kaushalan Sinha. Please analyze Deepak Nitrate.
Okay. Fair enough. Let's go to Deepak Nitrate. Yeah, could you share my screen? Okay. Yeah, large cap company in the chemical sector. First negative point, score has actually changed from buy to hold. It's 1 negative point over here. You can go down and see the technical trend as well. Okay, even another negative point over here, company turned mildly bullish from bullish. So 2 negative points straight up front. Okay, and if you see this, the final score is actually showing at 58. It's below 60. Now, if you remember, I had recently showed a particular chart. If a company is hold, how do you go about investing in it? If it's from 50 to 60 and moving downwards, it's the time for exit. So let's see if it's between 50 to 60. Let's see if it's moving downwards. Click on returns. So you see last 1 month, it's actually moving downwards. It's down by -4% last 1 month, down by 0.1% in the last 1 week, so on and so forth. If it continues to go down, this company is in your portfolio, please exit it. I would not even suggest you to enter today because the score is actually falling. You can look at the financial trend as well over here. Yes, it's actually fallen. So no, my opinion would be if you have it in your portfolio, then you have to be careful. You have to actually look at exiting this company. And since the company is actually moving downwards, I don't think it's a good time to enter. But if the next result comes out and it's actually doing well, then that could be a good entry point to enter in this company. Yeah.
Next question by our investor Srinivas. Can you brief on Karnataka Bank?
Karnataka Bank, okay. You share my screen. So if you remember, recently I had done an event and strategies and stuff, and many public and private banks were actually falling into this particular filter of mine. I think Karnataka Bank was also falling into our particular strategy last time. 82 strong buy, really good. I'm a bit worried because these companies have actually moved up a lot recently. So if you click on returns, okay, so this you can see 1 month up by 15%, 3 months up by 100%. This stock has actually doubled in the last 3 months. Okay, even though it's doubled in the last 3 months and has done very well, I think the valuation is showing green, so it's still attractive. One major risk issue over here is that the quality, as soon as you see this dot, the quality is, I think, average, under all 3 parameters. If you can actually stomach this risk investing in a small cap average company, then it's fine, you can go ahead investing. But just be careful because the company has also moved up a lot and there might be a limited capital appreciation. Yeah.
We have a question by another investor, Kushal. How do we pick stocks from different sectors? Is stock research feature built for that?
Yeah. So you can actually use screener and stock research together to actually pick from different sectors. But if you could just share my screen. Yeah, and if you go to compare over here. Okay, so within this particular sector also you can compare the companies. So if you can see Karnataka Bank, within that particular sector, how are other companies? So we said Karnataka Bank was average. There are good quality companies as well. Or yes, there's another average company over here. Okay, so this is with its peers, so on and so forth. But if you actually want to see across sectors, simply go. Then there are many ways you can go. You can go to the result corner and see which particular industry is doing well. If you click on the result corner last time, I'd actually showed you all that you can simply click on industry over here, click each sector and understand, okay, 34 companies are positive in this sector, this quarter. You can click finance, NBFC, so on and so forth. So you cannot only look at stock research, you should actually combine this with a particular screener and then look across different industries to pick best stocks across industries. Yeah.
Next question by our investor Shiv Kumar. Beyond aesthetic life science for long term?
Long term, okay. I don't actually have much long term views on companies, but I'll take you across that. Yeah. So if you see here in this particular company against the small cap, company score has changed from buy to hold, which is a negative. So that's a very important indicator, and I really like this feature because it actually gives you an idea of how is Markets Mojo looking at the stock's potential. Again, when the technical indicator has turned mildly bullish from bullish. So this company might actually fall down even more looking at the current trend in the company. If you look at the financial trend, okay, it's 12 from -2, but the company is still falling down. Long term, I can't actually give you any particular opinion over and above. The valuation is also very expensive. So if you remember my presentation, there are two indicators to look for the long term of the company. I'll just take a look across that one. Yeah. So if you remember, I told you about long term consistency parameters. You look at quality and valuation. Yeah, the quality is good, but the valuation is very expensive. So over the longer term, I'm not sure. Yeah, so if you have thinking of investing in this company, you can look at other companies from pesticides and agrochem under small cap. Simply go to compare. Here you can see other peers. There's Rallis India, Sharda Cropchem, other pesticides and agrochem companies you can look into investing. Okay, so if I can see a quality good, valuation is very expensive. So there are attractive valuation companies as well. If you ask me from all the peers, which one I would like to invest in, I can't see anyone with 3 green dots over and above. I can see Best AgroLife, even though it's expensive, it has an outstanding financial trend. Okay, it's also Mojo stock over since past 17 days. So if you ask me from this particular sector, I would still suggest you to invest in this particular small cap company from pesticides and agrochem. Yeah.
Another question from an investor, Bangaraya. You're suggesting for entry strategy. What is the exit strategy? How to verify the parameters?
Okay. When you look at exit strategy, what I would suggest to you is one, look at the previous Mojo score. This gives you some idea of how Markets Mojo is looking at the particular trend of the company. If you could just share my screen. Yeah. When you look at exiting a particular stock, remember this is the range we have to actually look at when the company turns hold. A lot of stocks come in as Mojo stock. Let's say you invested in Best AgroLife. You have this particular stock in your portfolio. It's turned from buy to strong buy. Now when it comes to hold, there's a lot of confusion. So when it's under the hold criteria, if it's from 60 to 70 and it's moving upwards, it's fine. But if it's come to the hold criteria and the score goes to 60 and it's moving downwards, that's when you should actually look at exiting a particular company. You don't actually have to wait for sell and strong sell, because by the time the company moves from buy to sell to strong sell, it'll actually fall more. You can actually base your exit criteria over here in the hold dot. Also, technical is really important to actually understand whether you should exit from the stock. Now, this company is currently bullish over here, but when you have to look at exiting, this particular thing starts turning into red. So this is another indicator whether you should look at exiting. Finally, if it's the result season and the particular company, now you can see it has seen outstanding financial performance. If it's still outstanding and improves, it's good to remain. But if this particular dot, if the company disappoints the market with a very negative performance or a negative performance, or it falls straight to flat, that's when another thing you should actually alert yourself that an exit might be required in this particular company. So if you ask me in brief exit strategy, you can look at 3 to 4 different things. One is the change in the score, the technical as well as the financial trend indicator, to give you some idea as to when I have to look at exiting the stock now. Yeah.
Jigar has a very interesting view for you, Jason.
Yeah.
Jason, please keep up the good work. And for you, it's all 4 dots in green and CFT score 30.
Oh, thanks a lot. I think that's a compliment. I don't know. It's not flashed on the screen. I think many investors must have not understood it. If you could just flash it on the screen if you don't mind.
Okay. So Jigar also wanted your view on Gabriel and Oil India.
Gabriel and Oil India. Okay. So share my screen if you don't mind. Gabriel India, you can simply click over here. Again, 4 dots green, small cap company, so some amount of risk. Change from buy to strong buy, very good positive. And if you look at the technicals also turned bullish from mildly bullish. Okay, so this is a company which is moving upwards. All 4 dots green, so it's good. And I think Oil India, right? Large cap company, I think everything looks green over here. Only the problem is the technical is currently mildly bearish. So even though Marcus Mojo has said that this particular company is rating very well in the first 3 dots, there's a problem with the technicals over here. Let's see what's the problem with technicals. Company has turned mildly bearish from sideways, and many of the indicators you see are turning red over here, which is one There may be some news in the market. I think it's mostly because of the oil prices softening, if you can see. So it's a commodity-based stock, and this might be the reason if oil prices are softening, this company sells oil, so it might have a problem with that. So yes, if you ask me to enter in Oil India right now, I would say still wait. Gabriel India was in the other way a better stock to look into, but Oil India is something which is I think being affected by the commodity currently. So yes, I would suggest you not invest into Oil India as of now. Yeah.
That's it from Q&A session. Over to you, Jason.
Okay, really nice questions coming in, and I hope you all could actually understand the stock research feature. We've done a lot of demos on stock research. What I thought today was I'll touch upon some cards which are actually not discussed. That's why I looked into quartiles, the dividend returns, so on and so forth. I hope you'll like this session. If you'll have any feedback, simply drop it in the query box and I will look at improving. I think next week we've covered upon that particular journey I was talking about where we looked at picking stocks from different strategies, portfolio management. The next week I'll try to get in optimizing a portfolio, the third and the final webinar of our journey. But next week we have really interesting events. On Tuesday we invited a guest, Mr. Vivek Karve. He's the CFO at Mahindra Finance. If you could just share my screen, simply go to the webinar page over here. And we'll be talking about the NBFC space. It will be an exclusive Q&A with our Chief Investment Officer, Mr. Sunil Damania. Really interesting, and I would suggest all of you all to come for the event. We did have the latest edition to Top Stocks today, but this event for our paid members is on Monday at 7 p.m. So in case you think that there's no Saturday Mojo Stocks event today, don't need to worry. Today was my particular demo on stock research. On Monday, we will be talking about the latest addition to Top Stocks by our Chief Investment Officer, Mr. Sunil Damania. So looking forward to you all come for the event. Goodbye and have a great weekend. Thank you so much.